I don't agree. I mean, when we're looking at Turkey to invest, we're not looking for a world-breaking technology. I think if one is, one's wasting one's time. If you find it, then you consider to be very, very lucky. I think the Turkish market is big enough to make decent-sized businesses, and that's the reality. 77 million people is a lot of people. You have the dynamics, you have the internet penetration, you have the credit card use, you have the 24, 25, 26 million Facebook users. This is a market where you can make money. So I think one shouldn't kid oneself that you're going to conquer the world. You have to just be realistic, and I think you can make some good businesses. There are some good businesses locally. It's been proven.
And that's also where we come in when you think about it, right? That's our job. When you can't really ask a 23-year-old entrepreneur to think global. I think.
Why not?
I mean, you can ask them, but I'm their partner. That's why I come into the picture, and I tell them I will support you. I will go to the U.S. with you. I will go to Tokyo with you. Let's think global. So I think you're right. They don't think global, but I think it's also.
They should be.
But I think it's also part of our job to show them that we can go global, at least regional.
That's our value added. That's
exactly.
Our value added.
That's our job almost to show them that it's possible, right?
Right. So that's the job of the you say the job of the VCs is to help them to go from being a
one of our must-dos. Yes.
I think it's important for this audience to understand what the VC is thinking and what their parameters are. Number one, our money comes from global institutions who have many, many alternatives of where to put their money. They can buy gold, they can buy real estate, they can go into agriculture, they can go into buyout funds, and frankly, early stage venture capital is the most unpopular asset class in the world. I can raise more money trying to find sunken treasure in the Pacific than I can to invest in startups in Turkey or anywhere else. So one has to appreciate that money for venture capital is extremely difficult to find. Number two, so when we are investing, our responsibility is to the people who have been brave enough to invest money with us. And what does that mean? That means they want a return. They expect big returns because they're taking high risk, putting their money into early stage venture capital. And the problem is, when you're investing in early stage companies, your investment cycle is very long. From a startup to an exit may take 5-7 years. This is a long, long time. Even if you're making 3 times your money over 7 years, that's not a great return. So when we invest, and this is the main point, when we invest, entrepreneurs should understand the first thing we are thinking about is how do we exit this company? How do we make money from this company? When are we going to sell it? How long is it going to take before we get our money back? What kind of return can we get in 3, 5, 7 years? So everything is determined on those factors. So when you're taking money from a venture capital company, you should really bear that in mind and prepare yourself to really understand what the investment cycle is and make sure that your ambitions are aligned exactly with your investor.